What is good, everyone? So in today's video, I'm going to be going over the entire strategy that basically changed my life forever. Now, I'm also going to be showing you guys some pictures on the screen right now of me in 2021 studying, backtesting, live testing. I have done it all. I have tried all strategies, all indicators, all pairs, traded all session, all time frames. I've tried it all, trust me. And this strategy right here is basically what got me from being an unprofitable trader to a profitable trader. And it took me 3 years to get there. Now, obviously, it's not going to take you 3 years because I'm here. I'm going to share everything about it. And I'm not going to gatekeep any information. So do yourself a favor, take some notes, watch this entire video until the end because this might make you profitable. I'm not joking when I say this. I'm going to share everything about it, right? So sit back, relax, enjoy the video, and let's get into it. So you have to understand the fundamentals first on why it works, how it works, and when it works. And then after that, I'll show you guys some live trading examples of me making multiple thousands of dollars a day using this exact strategy, right? Now, the fundamentals first, right? First of all, there's only 3 phases in trading, okay? 3 phases, and the market can only be in one of these 3 phases at a time. That's very important to keep in mind. Now, there's the continuation phase, then there's the consolidation phase, then there's the liquidity phase, and after the liquidity phase, it starts repeating itself. So continuation, consolidation, liquidity, continuation, consolidation, liquidity. CCL repeats itself, CCL repeats itself, CCL. You get the idea, right? And when something is repeatable in trading, you can take advantage of that move because you pretty much know what's going to happen or what's most likely going to happen, and you can make a lot of money by doing so and become profitable, financial free, time freedom, location freedom, all that good stuff, right? Now, let's go over this, right? So this is the continuation phase right here, red box. In a bullish example on the left, bearish example on the right, obviously, right? That's pretty self-explanatory. Now, this is the continuation, as I said. It is the overall higher time frame trend or bias, right? In an overall bullish trend, obviously, we have a high, higher low, higher low, basic market structure. Low, lower high, lower low, lower high. Everyone should be knowing this by now, right? Now we move into the second phase, right? Remember, this follows each other. The continuation, after the continuation starts the consolidation. After the consolidation, we get the liquidity. After liquidity, we get that continuation again. Remember that. So after the continuation here, we get that consolidation. Consolidation just means that price is moving sideways like this with no clear direction. And whenever price is moving sideways, it is also generating buy side liquidity and sell side liquidity. Liquidity equals stop losses equals money, right? Stop losses is obviously stop losses from institutions and retail traders, and that equals money. Money equals liquidity. It's also a repeatable cycle. And when you know this, you also know that there's liquidity resting above these previous highs, and there's liquidity resting below these previous lows, right? And that also equals stop losses and also equals money, right? So now, price is just moving sideways right here with no clear direction just yet. This is where we move into the liquidity phase, right? Because the liquidity phase is where we get that liquidity grab following the overall higher time frame trend, right? So most retail traders see this as a high, higher low, higher high, higher low, high, and they're anticipating this move to continue up, right? So everyone gets in buy positions right there, stop loss below the previous lows. There's 2 forms of liquidity here. There's liquidity above previous highs or below previous lows, and there's liquidity at equal highs and equal lows, right? So there's liquidity below previous lows in this example, in the bullish example, above previous highs, in the bearish example, and liquidity equals stop losses, right? There's stop losses resting down here. Now, you just have to ask yourself here, if everyone is getting into buy positions right here, or like 95 to 99% of traders are getting into buy positions right here with these stops down here and take profit up here, well, the market just going to shoot directly up, and then everyone makes money. All the retail traders makes money, and the market loses money, because when the market loses money, you make money. When you lose money, the market makes money, right? So obviously the market wants to make as much money as possible, and if everyone is getting in right here, 99% of traders are getting in here, but 99% of traders are also unprofitable. They never make it out, right? So we have to do the math here. If everyone is trading this way, you just have to not trade this way, and you have to be in the top 1% compared to the top 99% of traders. Now, ask yourself this. What is the top 1% doing differently compared to the top 99% of traders? Well, the top 1% of traders is waiting for the 99% of traders to get stop hunted, liquidated, manipulated, and then take advantage of that move post liquidity grab, okay? We'll also get over that in a second here. Now, as I said, everyone gets in here, buys right there, stop loss down here, take profit up here, anticipating this move, right? Obviously, price wants to grab liquidity first, stop out everyone. So this becomes a liquidity gap, and after the liquidity gap, we get that continuation. In order for price to continue up, we need to go down first. In order for price to go down, we need to go up first. It's like a rubber band. Look at this. Imagine this is price right here. In order for price to shoot up, we need to push down, grab liquidity, grab orders, stop out everyone, liquidate everyone, and then with that momentum from the liquidity grab and market open, boom, we get that continuation post liquidity grab, right? Continuation post liquidity grab, because after liquidity grab, after the liquidity phase, we get that continuation, CCL, CCL. Vice versa. If price wants to go down first, we need to go up first. In order for price to go down, we need to push up first, liquidate everyone, stop out all the retail traders, and then with that momentum, boom, we shoot directly down with a lot of volatility. Now, as I said, it's all repeatable, which makes the strategy so crazy, like crazy good, crazy win rate, and a good risk reward as well. Now, after the liquidity phase, you obviously get that continuation again, CCL, CCL. And then after that, we take advantage of that continuation post liquidity grab. In a bearish trend, it's the same thing, low, lower high, lower low, lower high. Buy side liquidity resting above previous highs, because most retail traders get into sells right there, stop loss here, take profit down here. What happens is the market gonna shoot down, everyone hits their take profit, all the retail traders make money, the market loses money? No, obviously not. The market wants to make money, it wants to hunt money, and money equals liquidity, liquidity equals stop losses. So it's gonna shoot up before continuing down, right? In order for price to continue up, or I mean, in order for price to continue down, my bad, we need to go up first, right? Grab liquidity, grab orders, stop out everyone, and then with that momentum, we get the continuation post liquidity grab. That's the fundamentals of it. Let's go over some more stuff about this on TradingView. So let's hop over there now. So in order to make this a bit more simple and easy to understand, you have to understand that this right here is a breakout. Everyone trades breakout. Most traders trade break and retest and continuation, right? But there's something missing. There's obviously the liquidity part, liquidity phase missing. So most retail traders see this as a break of a significant level right here. Let's say that this is the significant level, right? Breakout, retracement to that level, rejection, everyone gets into buy positions right there, stop loss below previous lows, right? Remember the liquidity, right? Stop losses equals liquidity, liquidity equals money. Is price gonna shoot? Let me actually draw this. Is price gonna shoot directly up? Everyone makes money? No, obviously not. The price is gonna push down and then grab liquidity and then continue up post liquidity grab, right? So we take advantage of that continuation post liquidity grab. That's the entire strategy. But also, I'll also show you guys some candlestick confirmations, how to do it and when to do it and all that good stuff, and also live trading examples. That's a bullish example. And remember, if 99% of traders are trading this exact way right here and 99% of traders are unprofitable, do the math, right? Don't do what 99% of traders are doing, but be in the top 1%, right? And the top 1% don't enter right here. They wait for them to get liquidated and then enter post liquidity grab to anticipate the continuation, right? So in a bearish example, this would look something like this. Breakout of this significant level right here, retracement to that level, rejection at that level, everyone gets in sell position right here. The market basically traps everyone, places their stop loss down here, or I mean up there, and anticipating that there will be a new lower low, because this is a low, lower high, lower low. They're anticipating this move. But if everyone is getting into sellers there, is the price going to shoot directly down? No, it's obviously not. Price wants to hunt money before continuing down. So price is going to liquidate everyone, typically at a market open. I'll also be going over the timing techniques about this, and then it's going to move in that bearish direction. As I said, if price wants to go down, we need to push up first, liquidate everyone, stop out everyone, and then with that momentum, boom. If price wants to continue up, then we need to go down first, grab liquidity, grab orders, stop out everyone, liquidate everyone, manipulate everyone, and then with that momentum, post liquidity grab, we get the continuation, right? That's also the fundamentals. Let me draw some candlesticks here so it will make a lot more sense. And after that, we'll go over some live trading examples. So let's get into that. So I've just drawn out two examples here, right? So a bullish example, bearish example, and this is obviously the same exact price action, right? Just on the 15-minute time frame compared to the 30-minute time frame. 4 15-minute time frame candles are obviously 2 30-minute candles, and vice versa in the bearish example, right? Now, this is what most retail traders see, and 99% of traders see, is that they see a breakout of this significant level, right? Retracement, and then a rejection at that level. So what happens? Well, if everyone sees that this is this is looking like a solid buy position to anticipate price to continue up here with a new higher high. If most traders are in this position, because they are trading break and retest, right? Everyone has been taught this way, including myself, right? And basically, everyone is in here, stop loss down here, because there's two forms of liquidity: below previous lows, above previous highs, or equal lows and equal highs. In this case, equal lows down here, because these two are the exact same, at the exact same level, right? Equal lows, right? Now, there's liquidity down here. Is price going to shoot up? Everyone makes money? No, obviously not. In order for price to go up, we need to go down first, grab liquidity, grab orders, and then we get that continuation post liquidity grab. So instead of getting in right here, you wait for those to get liquidated with this massive liquidity grab candle right here, and then you enter either on the flip, break of current, break of previous, or some, an impulse entry. But we will also go over the entries here in a few minutes, don't worry. And then that is your position right there, right? Post liquidity gap. You could take advantage of that move post liquidity gap. We can even draw it out in circles. Continuation, right? We get that consolidation. Then we get that liquidity grab below previous lows. In a bullish example, liquidating sell side liquidity, right? And then post liquidity grab, we get the continuation, right? It is a repeatable cycle, as I said. And when something is repeatable, you can make so much money by doing this, right? And obviously on the 30-minute time frame, we just get a closure above. Everyone gets in here because wicks on the high time frames are just candle closures on the lower time frames, right? So this closes above, everyone gets in buys right here, but obviously price wants to, stop out everyone, manipulate everyone, and liquidate everyone. So pushes down, breaks previous lows, breaks all these lows on 50-minute time frame, boom, liquidity gap, continuation post liquidity gap. In a very example, you see this break, right? You see this breakout, retracement to this level, rejection, everyone gets in sell positions right there, stops above previous highs, anticipating a new lower low. Is the market going to shoot down to everyone's take profit? No, obviously not. It's going to shoot up, liquidate everyone. As I said, rubber band theory. In order for price to go down, we need to go up first, grab liquidity, stop out all the retail traders, and then boom, we get that continuation post liquidity grab, right? It is so easy, but obviously it's simple, but it ain't easy. Okay, let me just rephrase that. Like, trading is simple, and when I show you guys this, it sounds so simple, and it honestly also are, but it is not easy. Okay, you also have to understand how to use it and when to use it, and how to become profitable by doing so. But these are the three phases: continuation, consolidation, liquidity, and continuation post liquidity. Now let me go over some chart examples now of this happening every single day, right? And let me guys show you some timing techniques, execution techniques, and basically how to do it in real time as well. So live trading examples after that. So let's hop over to some chart examples and let's go over that. Yeah, I'll see you guys over there. All right, so right here we have a live trading examples, and I believe this is a bearish example. Let's actually play this and let me mute this, hear myself. Yeah, so NYC is opening up at 9:30 a.m. Eastern. Market open typically happens at a market open. So London open, New York open, 8:30 a.m. Eastern, or NYSE open on futures as well, right? So, 9:30 a.m. Eastern, basically, right? Now, let's play fast. Let's play price fast forward here. I think I predict this move as well. Let's see. So I essentially just want this 4 hour to end up flipping bearish, and with that liquidity grab to the upside, liquidating these highs, right? That becomes a liquidity gap, and we can then take advantage of it going down. Yeah, so I basically predict the entire move, right? I'm just anticipating that because I've seen this happen so many times. I can pretty much predict what's most likely going to happen, and if that happens, I'll take advantage of it, right? And we can also go, draw the circles here, continuation, right? I mean, I'm guessing you're getting the hang of it, right? Consolidation, and then we get that liquidity gap at market open, NYC open, 9:30 a.m. Eastern. Post liquidity gap, we want to take advantage of that continuation, right? Repeatable cycle, CCL. Trust me, it is so beautiful, right? So basically, I place my sell stop there. You can also see top left corner, live account. Obviously, I don't trade demo. I'm not flexing Rolexes. I'm not flexing rented cars in Dubai or whatever. None of that BS. I'm here to teach you how to trade and how to become profitable, not flex you a lifestyle, okay? Now, place my sell stops on the break of the current low, basically get activated, and price continues down here. Beautiful trade. Close about, how much do I make on this position? I make, let's see here. So boys, I'm just gonna close right there. Yeah, so 1.3K, and I believe it's like, wait, let me see here. Yeah, it's like 2.4K week, so nothing crazy, but I mean, you can kind of, it doesn't get any more beautiful than this, right? Price action is so beautiful, and when it's beautiful, and it's when it's repeatable and readable, you can make so much money doing so. That was a bearish example, right? Just a continuation post liquidity gap again. Same candle happens over and over again on the most volatile pairs in the most volatile session. So NYC or New York session, right? So beautiful. Now let's go over another live trading example, and let me guys show you. Yeah, just another example. I'll hop over there right now. So right here, we've got a bullish example in this case, right? And it's so beautiful. I mean, price action combined with liquidity grabs is what moves the market, aka what you need to look for learn, identify, and master that. And that's what I'm here for. I'm teaching you this all for free. So I hope you're taking advantage of this and you're taking some notes. And if there's something missing or something you kind of don't understand yet, just rewatch the video. It's completely fine. This obviously took me 3 to 4 years to master this. So it's pretty hard to maybe learn it in under 20 minutes here. But I'm trying my best to simplify this as much as possible. But anyways, let's see here. Obviously, live account, top left corner. Wait, can you even see this because of my webcam? Wait, I don't even know if you can do this. I'm not going to edit this out, but I'm just going to show you guys. Yeah, top left corner, live account. As always, I don't flex rented cars or whatever. I don't flex Rolexes or demo profits like most guru does. Like it's absolutely crazy. But anyways, I mean, you can see the entire play again. Continuation here, bullish trend, right? Then we get that consolidation, right? We get that liquidity grab right there, following the overall bullish, higher time frame trend. Post liquidity grab, we get that continuation. Happens over and over and over again, right? It's so beautiful. It is really beautiful. Like, and it's also really windy here in Croatia. Yeah, it's really windy here. Damn. But yeah, basically take advantage of the move and yeah, I mean, close out for like what, 1.1k or something. Let me see here. Let's play my video here. Yeah, 1.1k, nearly 1.1k. Beautiful trade. Continuation, post liquidity grab. Let's go over one more trade example here. And that's going to be the last one, and then I'll show you guys some free PDFs you can take advantage of it and download for free to help you understand this strategy more in depth as well, right? So let's go over to the last live trading example. So right here is the last live trading example, and you can kind of get the hang of it, right? I believe you're getting the hang of it. Let's actually go back here. The continuation right here, continuation, then we start to move sideways, so a consolidation, then we get that liquidity grab, or at least I'm anticipating the liquidity grab is going to be up here. If you look at trading view, right here, I've drawn the red level above previous highs because there's liquidity above previous highs, right? I'm anticipating a liquidity grab up here, and then post liquidity grab, we can continue down like this, right? In the continuation phase. Obviously, above previous highs, there's liquidity, so I'm anticipating that price will continue up there. Taps perfectly, get into sell positions right there, and then basically break even right off the bat because there's so much volatility in a volatile pair on a volatile instrument. And basically it's market open 9:30 a.m. Eastern. I mean, it's supposed to be volatile. It is volatile. Grab liquidity, and then now we can just take advantage of that continuation, post liquidity grab. It is so beautiful. It is so beautiful. Like, it's just beautiful price action. It really is. And then obviously this trade was a bit long, actually, like an hour. Typically, like, trade duration is 3 to 10 minutes on average. Win rate, to go over some statistics over this, right? Win rate is about 80 to 83% over my last few years of data collecting. Average risk to reward is 1 to 1. Yes, you don't need a 1 to 20 in order to become profitable. I don't know who taught you guys that, but I've seen that trend go over the internet. Like, high RR is not better, okay, boys? Obviously, if it works for you, then it works for you. But this is a 1 to 1 risk reward with an 80% win rate. Actually, just 83, but I'll just round it down for round numbers, right? But 80% win rate with a 1 to 1, that is super profitable. You can be profitable with a 1 to 1 51% win rate. Like, obviously that's not a big edge, but this has an 80% win rate, 1 to 1. It is unbelievable, okay? And obviously, I'm here to share it all for free for you guys, and no charge and nothing. As I said, I could be charging $1,000 for this, but obviously, I'm here to teach you for free. I exited the trade, made about $2,104. You can see 5.6K in the last 2 weeks. So it's so beautiful. It is really beautiful. Continuation, consolidation, liquidity, post liquidity grab. We take advantage of the continuation. When everyone gets stopped out, manipulated, liquidated, we enter. We are the top 1% compared to the top 99% of traders that lose money. Now, I want to show you guys some last thing here. This will also help you understand the strategy and implement it on your own and use it every single day, right? So I'm going to be going over a free PDF file, and let me actually just show you guys here. Let's jump over to that. So right here, you guys can see I've got a 16-page free PDF file going over this entire strategy. Right here, you can see it's a breakout, liquidity grab, continuation, post liquidity grab. You can see this is the exact candles I use every single day to make multiple thousands of dollars, and this is what changed my life. If you want access to this this completely for free. Like, you don't have to, send me anything, or, I'm not charging you anything for this. Just download it in my free Discord. It's over there for free. And if you want one-on-one mentorship, if you want me to change your life and implement all this, if you're struggling with it, right, you can always, take the link in the description, and I'll happily help you. I'll become, or make you become profitable, guaranteed. Yes, guaranteed. I'll change your life. But obviously it's not cheap. It is not cheap, but you can apply for it if you want to. Link in the description. If you want to download this, it is also in the description. So I hope you guys found that helpful. If you did, please leave a like and comment and subscribe. Leave like a nice comment. Leave like a comment if you think this is valuable or informational, because it means the world to me. I want to see if people like these kind of videos, so I'll make more of them, right? So if you do, leave a like and comment and subscribe. And obviously, take care, and I hope you guys found it helpful. And otherwise, I'm out, and I'll see you guys in the next video.